Hello, my Teaser King family. How is everybody today? I am well. Um, Everything's fine with Daria. She just has antibiotics and she just takes some shots. I says, I was worried. Why didn't you, why were you crying? Did you need a shot? So I don't know. She's got something in her face. She'll be fine. I said, I'm happy. Well, when somebody says I'm going to start crying, I think it's, oh my God, it's really bad. But maybe she didn't know, and then they told her, no, it's nothing. It's just a cyst or something, I guess, or something she needs an antibiotic for to kill whatever's there. So whatever. But she says, I don't have cancer. I said, okay, fine. All right. So happy she's okay. Gold, 28.94. What a ride it was on. So we were at 29.40 2 days ago, and then 28.95. China really didn't come back for us much. Then all of a sudden, Europe hits at about 4 in the morning, and then it does at 6 o'clock and 8 o'clock, drops down to 28.70. And then boom, the US comes in. And if you notice, this is totally fixed. If you notice, just before 10 o'clock, it always goes up. So the US can do their derivative down. So in other words, instead of doing it at 28.70, it goes up mysteriously to 28.98, where then the US does a put option, wanting it to go down at 28.98, but it only goes down to 28.88. And then it gets kicked back up to 28.94, which is where we're at now. But since we've seen 29, we will see it again soon. I'm not worried about that. Again, this is the problem with price fixing. Nobody is selling an ounce of gold, especially that much ounce of gold, that quickly. And then nobody's buying ounces of gold that quickly. Nobody would. They would buy it slow. That's what they're doing to not make the price jump too much. But this is about where the price should be 29 and change. Silver, we got 32.16. So we're holding. Again, this should go to the moon once we get but notice it's not going down. They're fighting to keep it low because the bullion banks will get killed on the derivatives that they're going to owe. I think once silver hits 35 is when it takes off. We will see, but hopefully that's what should happen. I thought 32 was the number, but now it appears to be 35. Okay. Now the banks have money, but it's all bullshit money. So I was listening to this guy last night, Mark Miller or Miller Moss or Mark Moss. What an idiot he is. He says, well, I'm an entrepreneur. I ran, I did 2 tech startups. Yeah, what did he do? An Excel spreadsheet or better yet, a derivative? Well, yeah, did he run derivatives? Did he do a spreadsheet or a what do you call these things? The ledgers, whatever they call it. The blockchain. I love it. The blockchain. It's a ledger. I've been doing general ledgers for 30 years. What the fuck do you like? That's not a big deal. All it does is it shows you the transactions. Oh my God, a blockchain. Like, Jesus, it's nothing. Anyway, so that's what we got. Gold 28.94. And we're in the U.S. is doing it now. So it goes China, London, U.S. So we're in the U.S. portion. China really didn't do what we expected. I wonder if they're doing. They are trying to keep the price down. Anyway, for 32.19 silver. Good news there. Let's see what's going on in football. Then we'll get back to economics. I like going into Yahoo for football. We were dabbling a little yesterday in trying to rank the teams, right? Just in case any of you folks want to bet up. So Boston would be an A team, 117 for, 108 against. Maybe New York's a B team. But then you get into these Philadelphia 109, 113, and Brooklyn 105, 111, and Toronto 110, 116. So you can basically see by that they're bad teams, or you just look at the record. Toronto 17 and 37 is obviously a Z team, but they're 110, 116. And again, these are macro looks at the numbers, not micro looks, home and away and things like that. Cleveland, I think they're the best team in the league, 122 and 112. They're the A team. And then you got Indy, who's 29 and 23, but they're 115, 115. They're an even team. So is Milwaukee. Detroit's 113 all. Chicago 116, 120. I don't know what that tells you. Milwaukee 28 and 24 is a 114, 113. And then Detroit 28 and 26 is 113, 113. And then Chicago, who's not really that bad, 116, 120. They do have their weaker defense, and they're 22 and 32. So this is very hard to really figure out what the hell is going on here. Washington, 9 and 44, 108, 121. So they're a terrible D. They would be a better guess, but you're probably laying 15 points in these games. Charlotte, no. Well, here, Orlando, 104, 105, even, and they're 26, 29. Atlanta, 116, 118, and then Miami. So I'm not going to get into every team, but this is why it's very difficult. So let's go to, I guess we got to pick a sport. So we'll go into NFL. Top NFL news, NFL offseason previews, 32 teams needs, free agents, and more. Well, I would say all 32 teams need defense, except for Philadelphia. They all need running backs because they don't realize they need running backs. And as good as Barkley is, he didn't do anything in that game. Barkley just got bottled up. What did he have? 15 carries for 50 yards. And he didn't do anything in the red zone. Jalen Hurts, he's kind of, because they had Barkley and they were keying on him, he was able to do more things. But that's what a running attack will do. A running attack makes your quarterback better because now you're diversified. Are they going to run? Or are they going to pass? That's what every offense should be, and every offensive coordinator should be, is you don't know if we're going to run or pass. How do I play defense when I really don't know what they're going to do? That's why I hate these 4 or 5 receiver sets. Geez, I think they're going to pass, or if they have a Josh Allen or one of these Hurts or something, they're going to run when they go 5 wide. They're just trying to spread out the field. So that's even more of an obvious. The quarterback's going to do a quarterback draw. If Buffalo goes 5 wide, it's quarterback draw. That's what you got to play it for. But you got to cover the guys, because otherwise then he just if you can leave a guy uncovered, he just throws the pass to him. As bad as he is, he can still complete it. But the NFL has lost its way. They've lost their minds. The refs are those calls early in the game were really a joke. They called pass interference, an offensive pass interference. And the excuse was, well, he hit him in the head. He didn't hit him in the head. He touched his head. That's hardly a hit in the head. And there's too many of those penalties, what they'll call personal foul, and he touches the head or the face mask or something. It's not a personal foul. I hate to break it to you. That's just lightly touching the guy in the head. It's like face masking. You got to grab it and pull. Face masking isn't just touching the face mask. It's then pulling with the face mask. And that's how half of these calls are just ridiculous. The league looks just stupid. He barely touches Mahomes' head. It's a personal foul. Roughing the passer. And you're like, that's not roughing the passer. Roughing the passer is taking the passer and throwing him down or giving him the cheap shot after, not merely, he grazed his face mask, so that's got to be, roughing the passer. I mean, it's so stupid. And you got to look at the time and the score and where they are in the field and everything. I mean, it's 3rd and 20. There was a play against Kansas City. It was 3rd and 20, I think, or 2nd and 20. And they called up a penalty, and it was a joke. I mean, the guy barely touched him. Certainly not a personal foul, and it did change the momentum. KC would have held him, and then Philadelphia gets a first down. And it's little things like that where the refs fix the games, and that's why we all think the games are fixed. It's the refs who don't make $20 million a year or $30 million a year who are fixing the games. They don't make enough. So you come up with $1 million for them and they'll take it. And they're so bad, you can't really tell what they're doing. So that's the real big problem. It's so obvious it's fixed. It's crazy. Surprised they fixed Philadelphia. To beat Kansas City. You thought they'd have wanted the 3-peat. That's where you're not sure how fixed it was. I think the best team there was nothing they could do. Philadelphia wasn't going to lose. It's sort of like the Montreal screw job. Yeah, I know it's all fixed and it's set, and Shawn Michaels was supposed to beat Bret Hart, but Bret Hart's like, I'm not having any of it. I'm not losing in Montreal. And he actually tried, and the screw was he never tapped out. Shawn Michaels had him in the sharpshooter, but he was reversing it. He never tapped out. And he shouldn't have lost the match. And so I think sometimes, even though it is fixed, you still, if the other team doesn't go for it, it's not really going to be fixed. Now all of a sudden I see, Philadelphia is the number one. Well, you don't know next year, the free agents, the injuries that happen. That's what makes it. Look at Cleveland. I'm sure we're a much stronger team, but Deshaun Watson's terrible. Thompson Robinson was terrible. Winston. I mean, that's not the same team you bet on now for next year. So Philly, you got to see what's going on. Jalen Hurts gets hurt because the way he plays, or Barkley gets hurt, they're not going to win the Super Bowl. So that's why I hate betting that long out, because it's such a physical game. There's going to be injuries. What changes do the Chiefs need to make before next season? Nothing. Just you've got the running, you've got the defense, you've got the quarterback, you've got Spagnuolo. There's no change. You got to add maybe a couple offensive linemen that you can pick up in the 4th round in the draft. But You got to give Mahomes time. It's as simple as that. And it's like when Denver got killed by Seattle, right? And then, well, what changes does Denver need to make? Oh, just give Peyton Manning time to throw the ball. A couple years later, they won the Super Bowl, beating, I think, Carolina. So the change they made is not playing Seattle, playing Carolina. Brady figured out to get rid of the ball quickly, which is my point. The quarterback needs to read a blitz, and that's what half these guys can't do. Half of them are there because they can run, which makes no sense. So Amos Smith says, well, you need to run the ball. That's what they like about Lamar. He's an extension of the running game, but the problem is he's the quarterback. He needs to throw it. So that helps them, but when they need passing, he doesn't show up, and that's the problem. So it's going to be fun for, Baltimore. They'll never win because now they're paying Lamar $50 million a year, so you have nothing for the defense. You got Henry, okay, but as long as you have Lamar as your quarterback, you're never winning. It's like Jared Goff at Detroit. You're never winning. Stafford's good. Stafford gives you a chance. So you need the quarterback who can win and not choke. And it doesn't have to be the best. It doesn't have to look at Mahomes lost. But, Joe Burrow, you get a guy like that and you're all set. But that's what you need. But he didn't have balance this year. That's why Cincinnati struggled. And the defense went down, which was surprising. I didn't think Joe Mixon was that good that they couldn't replace him easy. They tend not to draft backs, which is a critical problem for Cincinnati. When you got Burrow and Chase, get a freaking running back, and then nobody can stop you, which they can anyway, but they need defense. So you just go down. Most of these teams need defense, except for San Diego, who's good. Denver, who's pretty good. Kansas City really is fine on there. Kansas City didn't lose because of their defense. Mahomes threw a pick six and another interception to the 10-yard line. That was 14 points of the 40. They gave up 26. It's not like they just ran all over their defense. They had a lot of turnovers. Mahomes will cost them the game with his not calling little quick passes to either Kelsey or the backs. You've got to recognize you did not have time to sit in the pocket and watch these 20-yard passes go. That's what happened with Darnell against Detroit when they were blitzing him and he's trying to hit Jefferson 25 yards down the field. He doesn't have time to do that. You can't be this stupid as an offensive coordinator to not have swing passes, crossing passes, and quick hits to the tight end when they blitz. There's got to be a blitz package. And the quarterback has to be able to recognize they're blitzing. There's nothing you can do if the quarterback can't recognize it, Lamar. If you can't recognize it, you're fucked because they're going to blitz you. And then what? I'm going to run? You're not running then because they're already on top of you. So the biggest question is not who they're drafting. It's how long do they want to keep losing, thinking Lamar's good, thinking Goff's good. To C.J. Stroud. Some guy thought Houston could make the Super Bowl next year, and that was C.J. Stroud. They do have a good defense, but look against Kansas City. They lost, 24-14, 23-14. You need a quarter. Joe Burrow wins the game with Houston's defense. So, again, you need the A team. Good offense, good defense. Again, they're stuck that C.J. Stroud's good. He's not. They think Drake May's good. He's not. Bo Nix is good. Herbert's good. They need some offense. Harbaugh came in and wants to play Michigan football. We're going to run it. until you get into these good games and these good teams and you can't run it, but they were pretty good. However, losing to Houston the first game, you couldn't handle their defense. That was terrible game planning, terrible coaching. So that's where you got to fire your offensive coordinator. Now, Detroit sort of fired their offensive coordinator and their defensive coordinator. They needed to. The defensive coordinator sucked. They should have fired him a long time ago. I doubt the Jets will win 5 games next year. If you guys bet team total, especially if they got rid of Aaron Rodgers, they won't win 5. How are they going to win? Who's their quarterback? I mean, they didn't score much with Rodgers. They're not going to score much with whoever they have backing him up. Although bring in a running quarterback, because that always works, right, Lamar? That's just stupidity on the team running it don't know what they're doing. That's like me if I took over a CEO position. All right, what's our market? What's our competition? What's our price? Is there demand for our product? There was, but is there still? Do we understand there's a depression going on? How are we going to survive that? Do we have any gold? Because our money's worthless. So I would probably just come in and then just sell all our money for gold and basically, okay, we're going to make a ton. I wonder if there's a business for that. But these companies don't know what they're all headed for zero. That's why I laugh when people buy stocks or have the 401ks. What are you doing? They're in dollars. They're not worth anything. Anyway, so let's see if there's any other news stories, and then we'll go to economics. Not making any crazy decisions, Kelsey says, on Chiefs NFL future. He probably would have retired if they won the Super Bowl, so now he'll probably come back to win the Super Bowl. I love that the girl got booed, whatever her name is, John Taylor. You can't say I'm voting for Kamala Harris. These people are actors or songwriters or singers. They're into either music or acting. They don't know anything about economics and voting and how to run a country. So they need to shut the fuck up. I'm negative Bitcoin. I'm sure I'm losing viewers who are into Bitcoin, like that one guy, but I don't care. I'm sticking with my guns. We're buying gold here because we've explained it. Bitcoin is a Ponzi. But if she's sitting there going, I'm going to vote for Kamala Harris, she pisses a lot of people off. She shouldn't be going there. She should just say, yeah, I'll vote in the election. And that's it. But now she's pissed a lot of people off who are her customers who buy her records. Frankly, I've never heard of this girl, and I've never listened to any of her music. I don't listen to a lot of music. It puts noise in my head, and it doesn't allow me to think. And I'm a very strong thinker and problem solver, and I can't do it if I'm listening to music. So I do listen occasionally, depending on where I'm going. If I go get Chinese and there's nothing on, I don't put on music. So I do like it to relax, but I find it to be a lot of noise. I hate concerts. It's just too noisy. I hate a lot of noise. When I go to the pool on Saturdays, I don't like it because the kids are screaming. There's a water slide, so they're screaming on the slide and they're screaming in the kids' pool. And I'm very uncomfortable. I like last night I went, it was nice and quiet, right? And me and this lady, and we look at each other like, now this is much better. Anyway, I'm not a noise person, but if you're selling to your market, the last thing you want to do is piss off your market, which is what she did. sort of like the barbecue place, as I say, don't make it $45 for slabs. I don't know. They closed two of the restaurants. One a few months ago. One I think just recently. So there was three barbecue restaurants. Now there's one, and I don't know. I don't think the others raised it to 45. But here's a perfect example of inflation. You printed the money, and the money's become your costs become worthless. Your costs went up for ribs, let's say, and steak and chicken and whatever. And because your costs went up, but you couldn't mark your prices up because the market wouldn't allow it. Therefore, you either fire everybody, but I need cooks in the back cooking the ribs. I need waitresses serving the ribs. I got to heat the place on electricity, and I need somebody to take the money and the phone calls if they are buying it. So it becomes a really difficult situation if I can't raise my price because my utilities probably go up. My utilities went up my last bill, but it was like 20 below, and I had the heat on much higher. So now it's kind of settled down. I've lowered my heat where I used to have it. I'm curious what my new bill will be next month. But, I don't normally have my heat set that high. Anyway, so you're running a business and your costs go up does not mean like everybody, they're going to raise prices. It doesn't mean that because the market controls if you can raise prices. Because we're running a barbecue restaurant, me and you, my family, and all of a sudden our costs go up. All right, we want to raise our price on ribs and chicken. The problem is, can we? Will the customers still come in and pay it? So our business is based on paying for inventory, ribs and chicken, and I think there's some fish there, and baked potatoes and fries and sell. So our business is to bring it in and sell it out. Well, the bring in part's fine, but the sell out part is controlled by us, the market. The people who come into the restaurant control if we can raise prices. And if we can't, but our costs go up, we have to go out of business. It's as simple as that because we can't raise prices. We can't, maybe we can cut a waitress, but how much are we paying the waitress? Maybe we cut a chef, but how much is that? So it ends up being, how many heads can I cut? We can make the heat, 65, but I got to have customers come in, and the electricity, I need the electricity. So I really can't cut. I got rent for the restaurant, and I got the ovens, and again, the inventory, the meat and the chicken I have to bring in. Can I push out? Now it's not only, all right, I just got the barbecue chicken the other day, and it was $14.95, which is about reasonable. He went up $2 on his ribs and chicken, so I guess his ribs probably went up. So he goes up $2 on that, and that was went from 22 to 24. You get about 6-7 ribs and a half barbecue chicken, baked potato or fries, and coleslaw. So it's a pretty good meal. That's why it's hard for McDonald's to compete, because I could get a hamburger there for $7 and I get fries and a salad or coleslaw all with it, which I don't get at McDonald's. Everything's kind of a la carte. Oh, you want burger? Oh, you want fries? Or maybe they make it where it's a family meal or something. But it's McDonald's. It's drive-through versus sitting at the restaurant. Sometimes you just like to go out to the restaurant, out of the kitchen, out of the house, have somebody cook it for you versus you cook it all the time. So basically, obviously they couldn't raise prices because the consumer wouldn't pay more. Maybe they tried and the consumer said no, or The consumer just, it's a recession. They've lost their job. I'm probably not going to go eat barbecue. I might eat McDonald's, or I might go like I do to the grocery store and I bought hamburger at $5 a pound. I bought 3 pounds of it. So for $15, I'm going to make 10 hamburgers versus paying $6 a hamburger. That's not a quarter pounder. It's not made as good as I do it with my spices and my cayenne pepper and everything. So I make it a lot better than they're going to make, a lot bigger. So why pay $6, $7 for a McDonald's or a Coney Island or anything? So again, there's the substitution options. But again, they're trying to sell their inventory, but you have to understand the market. And is there still a market? Is the market leaving? Yeah, people still need to eat, but are they going to the grocery store and eating Cheerios instead of going out to the barbecue and getting ribs, which are, if you got the slab of ribs, it's $30. And if you take your wife or your kids, it's $100 meal, which you probably don't have now. So, and then you've got the people in the 401ks who don't want to touch it. These are my favorite people. I mean, as we were talking yesterday, well, let's just say, so there's less people in the market because they're either not working, laid off, they're retired, and their other costs have gone up and they can't do anything. So these people are really in trouble. So they're not going to barbecue. Number one, the prices, even if you didn't raise them, are still, you did raise the chicken ribs to from 22 to 24. Piss people off. I don't know. Your ribs are 30. I don't know who's ordering a slab. And so it just becomes, you have to go out, you can't cut cost. So you end up where you have to go out of business because my inventory, let's say, costs me $20,000 a month to buy the chicken and ribs, but I'm only getting sales of $15,000 a month. So I'm losing $5,000 a month trying to move my inventory. Forget about the lights, the heat, the ovens, the people, all that stuff. I got to clean the dishes. I got to heat and air conditioning. So there's a lot of the heat, the electricity, and the water to wash the dishes that have gone up, that if you try passing on to the consumer, to us, we won't pay it. So you're in a catch-22. Your costs have gone up. So now if we include all the costs, it's $25,000 a month, but we can only get in $15,000, $16,000. We can't pay our utilities and our people and our water, forget the inventory. And so we got to go out of business, and you're going to see that a lot more. I think Burger King's closing down a lot, and you'll just see it because people don't have the money. That's what a recession does. That's what high interest rates do, is they make things cost more. And that's what inflation does. So the dollar's worth less. So you're really screwed, because if the dollar's worth less, you can't afford the ribs and the chicken and eating out and doing things and your utilities and everything else. You can't afford all that. So therefore, what do? And since you can't afford it all, you either raise prices, but that's extremely difficult. Like I said, they can't make the slab of ribs 45, but that might be their break even, might be slab of ribs 45, but nobody's going to buy it at 45. The market says no. So they have closed two of their businesses. It's not that expensive. Well, it is kind of, comparing it. I don't know. What do you compare it to? Certainly not a Coney Island. Those are just hamburger, hot dog places, chili, stuff like that. They're $6 for the burger, $2 for a hot dog, $5 for a chili. It's a $15 meal, but it's piecemeal. I love how they try to a la carte you. Oh, fries will be $3 more. Yeah, I can go to this barbecue place and get everything for $7. So it's a lot of competition, and the market's shrinking because people have less money that's worth less. I mean, that's really the problem, right? The money you have is worth less. That's the problem. So you still make, this is what people don't understand. Well, I still have 50,000, but I can't, now when I go get ribs, they're $25 for a meal. Now for me, I just go by myself, or I take Alyssa once in a while, but for a family of four to go out, you're talking $120, $130. Can you afford that? Probably, it's maybe once a month, but not like you could. And so that's where the whole problem lies is, well, I have my money, I got my 100 grand, but it's worth less. It takes more money to buy the same hamburgers and hot dogs and ribs and heat my house. And that's what people don't get. That's what I try to explain to the 401k people. And I say, you might have 500,000 in 401k, but the 500,000 is not worth as much as you think it is. And people cannot understand that concept at all. Not only does it scare the shit out of them, but they won't. Well, I have to pay taxes and a penalty if it's early withdrawal because it's a 401k. And this is the Ponzi scheme. You shouldn't be in it. You're avoiding some taxes, but then your money's locked away. And that's the real problem, is you can't use your money. So when you need to use your money to buy gold and silver now and catch the train going up or the elevator going up, you can't. So it's freezing your money. It's in a 401k, probably a mutual fund. You can't use it. You can't go to the restaurant with it, right? Well, I don't have any money. All my money, my friend in Florida, he goes, well, I don't have any money to buy gold and silver. Then he finally admitted, well, I do have a 401k, but I don't want to touch it. That's my retirement. Now, when you try to explain to him that you don't have a retirement because it's worthless, they can't grasp the concept that the money is worthless because the way to kill it is print it. $6 trillion debt, and you're printing $1 trillion a quarter. They can't realize that kills the value. You're doing it 4 times a year. That's $4 trillion. There is no value in the dollar. And when nobody wants it, then it really goes. So that's kind of like the slab of ribs. Let's say you go from 30 to 35. Nobody will want it. It's too expensive. If nobody wants it, it's worthless. You can't sell it. And that's what I'm trying to warn them. Keep that price down because you cannot sell it at that price. Anyway, so that's how a business works. That's how a market works. The market has prices. Prices are the signal, and you're looking at the prices. We see it in football all the time. Here the spread was Kansas City minus 1.5. Suppose the spread was Kansas City minus 10. Would anybody have bet Kansas City? Not a chance. And that is the market saying, we're not interested. That spread. We don't like that spread. We're not interested. And that's as simple as you can get. There's a market about everything. Women, men, grocery store, you want to buy golf clubs. There's always a fair price that you'll pay and a price you won't. And I just mean dating women. But, if they are, want very expensive taste and you don't have it, sorry. That's why it's not necessarily the looks as much as it's mentally and spiritually the women. So keep in mind everything. This is like going to a football game. How much are the tickets? And if they're too expensive, Super Bowl tickets were 4,500, I think, 5,000. Um, that's why you saw celebrities there who probably didn't have to pay for it. But Fox probably paid for it to put them on TV. Hey, look, there's Paul McCartney there. There's Taylor, the girl. There she is. Um, so I'm sure she's not paying for the tickets. I don't know where all these people have $4,500 to go to a game. You got to be out of your mind, especially when it's on TV. 4,500. Okay, so these are rich people. Okay, so you've killed your audience because now it's the regular guy who really wants to go can't go. I would never pay 4,500 for. I wouldn't pay 4,500 for a flight to go see Daria. I wouldn't. 4,500. No. It's usually about 900 to 1,000 to go to Europe, especially if you go on like a Tuesday or Wednesday. And this is the problem. So it becomes understanding your market, but as costs go up, as the paper dollars lose value, pretty much gone, this is why businesses fail. And then it's a domino effect. Now these people are unemployed. They closed 2 restaurants. All these people now are unemployed. They can't go spend their money because they don't have it. They have less money to spend. So therefore, now what do? And this is what happens. This is the problem. You have less money. So when the companies need to raise prices, they can't. So like I said, with Camry, Toyota, they want to sell it for 35. He has no market. And I had to explain the market to him. This is the sales manager, does not understand what a market is. I says, your sales are here. Your price is 25,000. I paid 24, but it's 25. You're up here at 35. Who are you selling to? Because your market's here. All the people that are going to buy a Camry are at 25,000, maybe 26. And you're trying to sell to 35 and there's nobody there. There's no market. So this is the most important thing you have to understand in a business. What are your costs and what can you sell it for? I do that all the time with my Canadian club. So how much does it cost me to make the bottle? Now I'm doing per unit because I'm doing a case of this and I'm doing 1,000 bottles of this. So my costs get divvied up to a per unit cost. Well, let's say my cost for this bottle is $60. What is it in the market? Can I sell it for 75? If I can't, I got to stop making it, or I got to figure out a way to cut the cost to get it down where I can sell it. What's my selling point? Because again, the whole point of business is to bring in inventory and you sell it for more, right? I'm unique because I'm a service. My cost is my time to analyze the football games. And then I sell the picks, but my cost is my time. I don't have cost. I got to pay for the website on iPower and I got to pay for something else, the server. That's my cost. And then it's my brain and my time. So I don't make enough on my time to sell it, but I can sell it for $100 a week or $50 a week. And it's pretty much, is there a market for it? Right. And that's what you're looking at. What is the market for it? And the better I am, the bigger my market, because I make you money. As Ron showed you yesterday, gave me a tip because I gave him the Super Bowl winner. So he made money on it. So he gave me a little bit as a tip. And that's it. Now, what I used to do is give away the free picks. And everybody I'd get all these tips at the end of the year, and you made me $8,000, or I made Titus $18,000, and then you get tips in, and so the better I am, the more tips I get, the more people buy from me. But I'm still trying to figure it out, and then I think people are leaving to go to this prop bets and money lines, and they don't understand teasers are the best way to bet. And so you're losing out there again. But because I'm a service, my costs don't really Oh, oh shit, I got to charge 150 because my cost went up. No, I don't have. I can still sit at the price point where I think my market's at. But that's service industry. Attorneys can do that. Oh, I charge 500 an hour. Well, good luck. When you hit $200 an hour, let me know. And it's not like they're any good anyway. Attorneys are mostly a bunch of con men. They charge you to make copies, and they're clueless when it comes to business. And you can see it when we see our government, which is all attorneys, basically they don't know how to do anything business wise. So you got to keep your eye on that. But this is what'll happen to the businesses as their costs go up because the dollar loses value and they need to charge more. The public is blinded that the value of the money has gone down. And then they're stuck in 401k, so they don't have the money to do that. Well, it's like me. Well, this is worth $1,000, but I got the card. I can't buy gold with this unless you'll trade it. I can't buy gold with this because I have the card, not the money. And that's how the 401k is. The 401k is sitting there. Well, I have the money, but I can't sell it. I got to pay a tax on it. And, I need it for my retirement. Well, your retirement will never happen because you're not going to retire. Most people won't be able to retire. That's why you see so many of them selling gold now. Gold's at 2,500. Oh, it's the all-time high. I'm going to sell my gold. Oh, gold's at 2,600. That's the all-time high. I'm going to sell my gold. Gold hit 2,700, the all-time high, 2,800, 2,900, 2,940. I ran out of gold to sell because I thought 2,500 was the all-time high because I don't understand it's derivatives and not free market gold. And so I don't know what the price is, the price I don't understand how it can do that. And that's why, like with silver, and they're like talking $50 is the all-time high. It's just preposterous. We don't know what the all-time high for physical silver is because we've never seen it. It's a lot more than the $50 paper derivatives. So as long as you understand derivatives and you understand that when the market drops, it's the derivatives game. They're shorting. They're doing what's called a put option, hoping it goes down. And then you'll see the price go down. And then everybody runs in because they are trying to buy it. And that's what happens. So let me finish. Jets reportedly told Aaron Rodgers he could not appear on McAfee. Now, if I'm Aaron Rodgers, I tell him to fuck off. Saints finalized deal to make Eagles Kellen Moore their next head coach. That's a problem. Kellen Moore, good quarterback at Boise, never played for the Lions because they were too stupid. I don't know why they drafted him if they had Stafford and they weren't going to use him. So then he's an offensive coordinator at Dallas, San Diego, and now Philly. He didn't do anything at Philly. They just ran the ball with Barkley. He didn't really do anything. Is he a head coach? He's never been a head coach before. I doubt he'll be a good head coach. Will they have a better offense? Only if he's the offensive coordinator. So he might help Derek Carr and Olave. How's he going to help the defense? So I think he'll be there 2 years and gone, just like Spagnuolo, great defensive coordinator, but a lousy head coach. Dak Prescott isn't too worried about Cowboys catching up to Eagles. They have no chance catching up to Eagles. Great article. He's not worried. What's he supposed to say? Yeah, we'll never win the division again. This team's too stacked. T. Higgins, I'd love to stay with Bengals, but it's not in my hands right now. Why would you sign him? You need defense. You need running backs. You can replace T. Higgins very easily. You cannot replace Chase, so you got to pay Chase. You got to pay Burrow. T. Higgins, if he wants $30 million, I tell him to go fuck off. What's next for Aaron Rodgers after Jets reportedly tell quarterback they're not interested? He should go to Minnesota. That'd be perfect fit for him. He's got Jefferson, good defense there. If I was him, I'd go to Minnesota. Um, Jacksonville for a year, Miami for a year. I mean, something like that. Super Bowl most watched game and halftime show in history. Well, I don't know about halftime shows. Most watched, yeah, I don't know. Is it Taylor? Is, did she draw fans in? How do you know who watched and how long did they just turn it on for 5 minutes? Um, I get, that's a bunch of bullshit. Uh, Super Bowl performer who raised the Sudan Palestine flag. Why would you have somebody like that at the halftime show? Oh, so that's why the halftime show was watched because you had a Palestinian guy raise the flag, so all the Palestinians tuned in. Is that really you're going political for a Super Bowl? Uh, all right, so that's about the news. Let's see, any NBA news, which we don't even know what it is. Chicago is one of the worst first halves in NBA. Who cares? Luka Doncic. I call him Luka Brasi. Trade looks worse than ever for Mavs. Um, that's a money trade. I don't. Everybody can't believe it. Well, they're trying to cut costs. This is when you see these trades. When you trade a star for nobody, you're cutting costs. The Tigers have done this for the last 10 years. They gave Verlander away. They gave JD Martinez away. They gave Scherzer away. It was cost cutting. The owner of the Tigers is just in it to make money. He's not in it to win. He got all these minor leaguers. They got lucky to win, but he's not doing anything this year. He won't spend money because he's in it to make money. It's a business to him. But his dad, Mr. I, wanted to win. He wanted to win. He didn't care about the money. They own Little Caesars, and this guy doesn't care about winning. He just wants money. So, is that a bad owner? I don't. It's hard to explain. If I was the owner, I'd want to make money too. Do I want to win? I don't know. I think it's more important to make money than to win because if I make money, it's for me. And if how much more money do I make if I win? Maybe I make a little bit more on T-shirts and hats and stuff, but I don't know. Uh, yeah, I don't know. Kevin Durant becomes eighth player to score 30,000 points. Who gives a shit? Uh, all right, so really nothing there. So let's go to this. Let's go to this Mark Moss idiot. I'm not going to get into this video, but the dollar's decline versus gold. It's not even that. It's the dollar's decline, the inflation. Who they all want to, for whatever reason, everybody wants to call it debasement, which I can't figure out. They don't understand the word. Just like deflation, they don't understand inflation. I think they say these words. They don't know what they mean, but they say them. So inflation, we know, is increasing the money supply. Debasement is taking the gold and silver out of the coins. You cannot debase paper. Now the value goes down. The dollar's decline versus gold is immaterial. The dollar's going down because they're printing it, and gold is going up because of everybody realizing the dollar's going down. And that's what these guys fail to understand when we look at this idiot.
Robinhood eligible contributions into your IRA. Gold has one of the they could no longer suppress.
All right, so here's this guy, Mark Moss, a Keynesian, a Bitcoin guy. Basically, now this is not 2 hours ago because I watched it last night. So I don't know where they're getting 2 hours ago. Or maybe this is when I say it. Here's a comment. Bitcoin is not digital gold. What a joke. See, this guy's a Bitcoiner. Let's get into his chapters. So let's listen to him explain the real reason of something.
Price of gold going up is, yes, because there's massive demand. Why is there massive demand? We already talked about the debasement. We already talked about being able to hold your.
All right. So what I'm saying is, why is the gold price going up? So he's not going to give a good answer, and I can't wait to rip him apart. Again, the debasement of the currency tells me this guy doesn't know what he's talking about. There is no debasement of paper. It's called inflation.
Assets in a way that governments like the United States can't steal from you. But really, we see these central banks hoarding, and we want to understand the dynamics of these things. So why are central banks accumulating in large quantities? I've already sort of given you some of this. Accumulating gold to diversify reserves, reduce dependency on the US dollar. China, in particular, has been on a gold buying spree for the 17th consecutive month. Now, nobody really knows how much gold China has because
60,000 tons
coming out of there. Whatever they show us, it's probably 3, 5, maybe even 10 times more than what they have. We can see here the People's Bank of China, the PBOC, continued a streak of gold purchases. It's diversifying its reserves away from the dollar. In February, China divested, meaning sold off treasuries, 22.7 billion in U.S. treasuries, sold the treasuries to buy gold. Strategic move by China reflects a deliberate effort to reduce its dependency on the dollar. Shoot, these treasuries could get taken from us like what happened to Russia. We should probably sell those and buy an asset like gold that can't.
So what he's saying, he doesn't understand. Well, we could get sanctioned like what happened to Russia. That's not the answer. The answer is we know the dollar is gone. We know they've inflated it to zero. We know it's worthless. We need to get out of the dollar, and that's why we're buying gold and selling treasuries to get out of the dollar to buy gold. In a sense, it's the inflation of the dollar being worthless is why all the central banks in all the BRICS are buying gold because they need to go on the gold standard to trade with each other because nobody wants their currency because their currencies aren't worth anything. So everybody in BRICS has to have gold. So they're buying gold because they're joining BRICS, but he never mentions BRICS. He obviously doesn't know what it is. Real good economist or whatever this guy is. He started up 2 tech companies. Oh yeah, so of course he should be talking economics. I hate when he pulls things and I guess he thinks we're a bunch of idiots. He has to read and underline what he's talking about. You ever see me read and underline anything? Do you ever see me read and underline? Unless I'm looking for the thing of money is these 5 things, and I forgot one. But he's hopeless. This guy is an idiot. He doesn't. We don't know how much gold China has. Yeah, we do. There's 60,000 tons, and thanks to Pat, we know about 20,000 by the citizens. So there's about 80,000 tons of gold. So don't act like you don't know. There's 25,000 in Putin's swimming pool. China has 20,000. We know all this. This is why we listen to Mark McGuire to get those details because nobody's going to tell us unless we investigate, which is what we do, which is what makes time travel possible, as you all know. So this is the thing. So this guy's, all he does is show his IT skills. He's a Bitcoiner, though. That means he's an idiot, right? I mean, anybody that wants to play Ponzi scheme. Now, am I pissing off my students who are into Bitcoin? I'm trying to protect you, but you've got to keep an open mind. You've got to understand it's a Ponzi scheme. You got to understand you should be in gold and silver because they can't print it. And you don't even know what you have if you have a Bitcoin. There isn't any. I see a gold Bitcoin every once in a while, but that's not a Bitcoin. That's just it's the Bitcoin symbol, but it's an ounce of gold. If Bitcoin was gold, then I could understand it, but it's not, and you don't get the ounce of gold. There's something called PAC where you don't actually get the gold. We're putting it in a vault for you. Oh, isn't that nice? Thank you, but no, I'll go buy my own ounces. So again, he doesn't really understand it. What's causing the price of gold to go up? It's demand. It's demand by all the BRICS countries and us that are driving the gold price up because they're taking delivery off of COMEX and they're buying physical. How does prices ever go up? Demand. If everybody went and ordered ribs at the rib place, he could raise his price to $40. And if he still did, he could go to 45. If the demand's there, is he going to have demand for ribs at 45? I say no. He's at 30. How much demand are you getting? Well, you had to close two restaurants. I'm not quite sure that that's the key. So this is the problem. The demand for gold by the central banks and the shadow banks and the citizens of China and Russia and people like us are why the gold price is going up, which is why every price goes up. Demand. It's not about everybody's worried about being sanctioned by the U.S. That's stupid enough to hold dollars, right? If I hold dollars, the inflation's eating me up and I'm losing money. If I hold my 401k, I'm losing. The money's going down in value. I'm actually losing. So if I do have 500,000, you still have that number 500, but what it buys you is nothing. It now buys you 1%, so it's worth 5,000, right? So that's the problem. You think you have 500, but you're not seeing the value drop in the dollar, which is what the inflation is. But you can't see it. You can go to the grocery store, see prices a little higher, or you go to the restaurant and ribs are $30 and a Camry's 35,000. So you kind of get the idea. Well, the money is worth less. That's why everybody's raising prices. What a coincidence. All right, let's go. Let's keep going with Mark the Idiot, Mark the Anvil Neinhardt.
Taken away. China is not the only country doing this. And it's a massive move. The PBOC acquired 224 tons, of which, and only 62 tons in 2022. So from 62 to 224, they have really stepped up the rate that they're buying. Now, sort of again, trying to.
So again, he doesn't understand. There's the shadow banks and the citizens are buying. So he points out this number 224. They make more, right? So they produce gold, right? There's gold mines and they make it, which are, 10, 20,000 tons, which he has no idea about. So if you're going to do a show, you better understand what the fuck you're talking about. And this guy, I love destroying him because he thinks he knows what he's talking about. And all he does is pull articles and reads them like, oh, wow, you really know what you're talking about.
Understand the differences of these markets. We can see that again in London, the LBMA, and now tap it into the BOE, that London's record gold outflow is going into U.S. stockpiles. Now, this is record. Again, this is historic. This is unprecedented. We can see here that shrinking by the fastest amount on record as banks, dealers, and speculators fly bullion to New York. So they're all taking it out of the BOE and the LBMA hands and moving it over to the U.S. So what is going on? Why is all of this gold moving? Well, part of it is because the demand is so high. We're going to get into some of this paper manipulation that's breaking right now. But it's also been because, and we can see I have another chart here just to show you how big this is. I love to show you these charts. So we can see this is the gold inventories in New York at the COMEX. And you can see that they are absolutely exploding. That's what we call parabolic right there. But to understand sort of these mechanics, what we kind of want to understand is what's really been driving this is China. China's insatiable amount of desire for gold, as well as their continued buying, as well as their divesting from treasuries to buy more gold, but more specifically, them setting up the Shanghai Gold Exchange. And what's happened in the Shanghai Gold Exchange is...
Okay, first of all, He doesn't know why New York's getting it. It's getting it to pay off the derivatives because they're doing all these derivatives without gold, and they have to pay China, Russia, India, and all the BRICS countries because they're the ones taking delivery on COMEX and they want their gold. That's why all the gold's going in. And it's not historic because London doesn't have any gold. They have very little because they were emptied, right? As Pat told us. So it's mostly other countries or ETFs or US had gold there for some reason, as opposed to our Fort Knox. Don't understand that. But it's just the US, and it's to pay off the derivatives. It's like the guy's fucking clueless.
It's sort of meant to break the grip of the paper markets that the US with the COMEX and London with the LBMA have. So gold investors, if you're a gold investor or gold bug, you know this. Been talking about it for years, how manipulated this market is because of the paper gold that's sold against it. And the reason why that's done is because you can't really get the gold out of the market. So you buy them through ETFs, and so then they're able to rehypothecate, meaning loan it out over and over again, and really build up the supply of gold on paper, even though it's not physical. I'm going to talk more about that in a second.
Can't wait.
What China did is they launched their Shanghai Gold Exchange, and now
Oops, you forgot to talk about JP Morgan and the bullion banks doing the derivatives to keep the price down, and they're making money on the options. Oops. He forgot to mention that. So you're putting out a paper price to keep the price low, and you're flooding the market with paper gold, not physicals. We don't give a fuck. And that's why the price is low. They're manipulating it to keep the price low. God, this guy's an idiot.
Physically settled. That means that I can go actually redeem and receive my gold. Now, what we're finding is that physical gold today, when you're worried about a run on the bank or a default, you want the physical. And we're seeing a massive premium being paid for physical gold.
If you're interested in crypto, then pop quiz, okay? What the easiest, safest, and most
premium being paid for physical gold. So when I can buy it for cheaper on one market and sell it for a higher price on another market, that's called arbitrage. That's what traders do, and that's exactly what's been happening.
Not been happening. Oh, God. Why would you sell your gold? You're getting out of the dollar to buy gold to get off the Titanic. Why would you? You're going to buy the gold that there's not a lot of, that's going up and up, and then you're going to arbitrage it on the Shanghai market. Are you kidding me? Nobody sells their gold at these cheap prices. So you're not arbitraging it. It's too little of an amount, and it's too hard to get the gold, and you're not going to take the gold to make $100 on it. I mean, this guy's living in a fantasy world.
One big factor pulling Western markets upwards, the price of gold upwards, is the arbitrage happening in China. And it's the fact that the Shanghai International Gold Exchange, SGEI, is a physically settled market, which is different from the cash settled markets in the West, the US and London. So you can do your options, you can make your bet on gold, but at the end, you get settled in cash, not physical gold. And China's changing all that. With a physically settled market on the scene, and with that market trading at a significant premium above what the West, the US and London, traders were able to buy up the COMEX or the LBMA futures and then demand delivery. So I bought them cheap and I demand delivery. I don't want just the cash. And then they sell the physical into Shanghai. This is what traders do.
No, they don't. They buy them because this is all the central banks in the world buying gold to get out of dollars. That's why they're buying the gold. That's why they want physical. And they're not selling it to Shanghai. I don't know where this guy's getting his information from. They are putting it, Czechoslovakia buys the gold, Poland, Hungary, Romania, Russia, China. They're not selling the gold. They're getting out of dollars to buy the gold. Why would they, if they're doing that, then why would they then take it to Shanghai and make $100 on it? And then there's still, well, how are they getting paid? In Chinese dollars that are worthless? So you're not getting out of gold into dollars. That's the whole point. I don't know where this guy is getting it from, but why would I do that? There's no reason to get out of dollars to buy gold because I don't, if I'm getting out because I'm worried about sanctions or the inflation of the dollar being worthless, and I go buy gold, I am not selling it on Shanghai to get what, yuan or dollars, or to get back into the Titanic. Does that make any sense? No, it doesn't make any sense. You're buying the gold, you're holding it. That's why every central bank is buying gold, because they got to get out of the dollar, but they don't sell it to Shanghai. What the fuck is this guy talking about?
Traders exploit arbitrage opportunities. It's sort of like the carry trade in Japan, right? We're always trying to buy low and sell high in different markets at the same time. And China, by setting up this Shanghai Gold Exchange, gives us opportunity for these traders to now buy it for cheaper in London and the US and sell for higher in China. Now, why is it cheaper in the US and London? Well, a couple of reasons. Number one, again, we know that physical gold right now at this point is more in demand. The governments are like, I don't trust anybody else. I want my gold. Also, investors are like the same, doing the thing. And then what happens is when the traders start getting involved, it starts to push that even more. All right, so that is the mechanics that really started pushing this higher. Now, there's a lot of rumors about China wanting to have a gold-backed currency. I've done videos talking about how the U.S. might even try to preempt China in that. We'll come back to more on that.
How can they do that?
Okay, now, what we're really seeing is the illusion of the gold market is starting to crack. The paper illusion. Now, we don't really know. I've seen estimates that there are somewhere between 100, 300, to maybe even 500 paper ounces of gold for every one single.
It's 96% is paper.
These funds, the ETFs, they take in gold, the banks, and then they loan it out. And then they loan it out and they loan it out. That's called a rehypothecation. Let me explain how that works. So let's say, for example, for easy use cases, I have a...
I can't. So the ETFs don't have any gold. They're not, nobody, if you go into the ETF, not getting physical gold right there. So I don't know what he's talking about. How can the U.S. preempt China unless what? We don't have gold in Fort Knox to what? We're going to do our gold-backed currency? Well, China and Russia are going to do it, because for China, Russia, and Brazil, and Argentina, and Saudi Arabia, and India to trade, they're going to trade with gold-backed currency. They're not using their own currency because it's worthless. So the U.S. can't preempt it. It's all derivatives because they make money on the derivatives. That's why they want the price down. So the dollar, so you'll stay in the dollar and say, oh, gold doesn't move. That's why they do the derivatives. Oops, you forgot to say that. All right, I got another couple minutes.
But I'm not hungry. I don't want to eat it. So I'm going to loan it to my friend. Now, he has a candy bar in his hand and he owes me one. So on my books, I should have a candy bar. But he decides he doesn't want to eat it and he loans it to the next guy. That guy loans it to the next guy. That guy loans it to the next guy.
No, if you loan it out, it's not on your books. So if I have the Mahomes card and I don't get loaning it out, I'm either selling it or not. If I sell it, then it's not on my books. There's no loaning this out. How do you loan this out? So I don't know what he's talking about. They're loaning the gold out. They're not loaning the gold out. They either have it or they don't. So it's not on 8 books. I don't know what this guy's on drugs.
5 candy bars in existence. The guy who physically has it, the guy who's owed one, I'm owed one. So now
why are you owed
candy
one?
Bars on paper, but there's only one actual physical one. But what happens if the guy at the end gets hungry and eats it? Well, now he's eaten 1 candy bar, but 5 candy bars have now disappeared. And so that's what we're seeing when we start to rehypothecate this gold. We start expanding the supply without actually adding it. So we have all these paper claims. What we're seeing, as I said, is now people are like, I want the gold. And so we're seeing that gold bullion has a premium over the paper claims. And that's why it's starting to break this cash settled market. Now, there wasn't a mechanism for this before, which is why it's something new. Now, gold futures contracts opting for delivery are surging. So we have something called backwardation, and this is in the options market. And so what this means is that people are paying more today than they could pay in the future. I'll pay a premium to get it right now rather than waiting for it. And that shows
it shows that there's no supply. So I'm panicking and I need it. That's why the price is going up, because people need the gold. They're not taking it to Shanghai and doing the whatchamacallit, he said, the arbitrage. Nobody's arbitraging. There's not enough physical gold to arbitrage it. So you make what, $100? Really? This is this is what the only people doing that are the guys who are at my gold store and the silver store. I bought a 10-ounce bar of silver yesterday. I'll show you for $337. I bought this yesterday. 10 ounces, $9.99 bar, $337. So it was $33.70 an ounce. Now, why would I sell it for $37 an ounce? So let's say I could arbitrage it and I could get $37 an ounce for it. So I can make $40 on it. Why would I do that? Only a moron would do that, because if you understand it, it's going to be $1,000 an ounce. So I'm just waiting for that. If you understand gold, it'll be $20,000 an ounce. The paper is dying because they keep doing the derivatives, and then people want to take delivery because they want the physical. And when they do that, they don't have it. So that's why they're going to London or wherever else the US has gold and getting it back to cover these people taking delivery on it. It's as simple as that. Anyway, all right, a little bit more of this moron.
I'll pay a premium to get it right now rather than waiting for it. And that shows the urgency that's here. We can see that there's been a surge in gold futures contracts opting for delivery. In the order of 28% of registered gold will be required to fulfill orders. So there's massive surge for delivery. Everybody wants the gold. They don't trust the markets. Now, the markets are set up to not have this happen. So
it's not that they don't trust the markets. It's that they know the dollar's worthless and they're trading their dollars for gold, like what we're doing, because we know the dollar's worthless. But he doesn't understand inflation. He not only calls it debasement, but he doesn't understand you have to get out of dollars to buy gold because the dollar's worthless. He doesn't get that. He doesn't get the prices going way up, and he doesn't get why everybody's asking for physical. Because I don't want the gold. So they're all taking it, and it's all the central banks, all the BRICS countries, Russia, China, India, they're all taking delivery because they all need the physical gold. Very simple. Yet seems a bit over his head.
It's very difficult for a trader to actually get the gold out of the market, and it's even more difficult to get the gold back into the market. This is a piece that I've taken from Peruvian Bull. Shout out to Peruvian Bull. We'll link to the full article down below if you want to check it out.
I can't wait for that.
Work on this. To take physical delivery, a trader must, one, hold a long position in a futures contract, because you have to buy the futures contract. And you have to hold it all the way till its expiration. Usually they're trading these things, not holding them all entire fund.
Stop using ChatGPT and do this instead. Disappear for 1 month to become the most dangerous person in the room.
Why is that? That's because the entire fundamental market is shifting. All right, so what's next? Where do we go from here? Well, I really see two options, two ways out. Now,
well, I can't wait.
Fundamental transformation of the entire gold market, but we only have to look back to history to see when this is
not in history.
In about 80 years, about every 80 years we have this financial.
This has never happened before, so don't go back in history to find something that doesn't exist.
Revolution. And we can see exactly what happened last time. So let me show you what history tells
us.
Now, the first thing is scenario number one, they try to patch the cracks. Of course they're going to.
The fuck does that mean?
Patch the cracks in this scenario to make it look like we don't have a problem. So this gold depository could, on paper, loan more to this gold depository so they could double count them, for example. They could borrow back and forth. But the problem is now we have a physically settled market. And this is what changed everything. So as I already showed you, the LBMA has 279 supposedly available on their books, but there's only 36 million available for withdrawal, but there's over 300 million in demand. When that starts to be physically settled, then we have a problem. So what happens is in the beginning, they try to patch the cracks. They try to loan to each other. They try to show that they have it to maybe bring some confidence back into the market, right? Now, it's like if there was a...
We're not that stupid, fella.
Show everybody, hey, you don't need to pull it out. It's very expensive. It's very hard. It's very time-consuming to get it out. It's better to keep it here. Look how safe we are. But we can see that they're also trying to help each other out as best we can. Here we have U.S. demand squeezes India's gold supply. Leasing rates rise to records. So they're leasing it, they're borrowing it, they're putting it on their books to make it look like they have it. Now, what we can see, why is it all moving from London, the LBMA and Bank of England, over to the US? Well, the US is also trying to prepare for this. So they're all trying to patch the cracks. But again, history gives us so many valuable lessons. And history shows us what happens in the gold markets when they become over manipulated and they're trying to patch the cracks. So we can see back here something called the London Gold Pool. Now, you might remember in 1944, we had the Bretton Woods Agreement where the entire world went onto a gold-backed standard. The US dollar would be the reserve currency of the world. It'd be pegged to gold. So 35 US dollars would equal 1 ounce of gold. And then the whole world would peg to the US dollar. But the problem is pegs never work. Traders are always going to exploit those pegs. And we also have the problem with humans and governments wanting to always print more, manipulate the system. And so we can see this is exactly what happened. Back in the 1960s, we had the London Gold Pool. And so basically this is the same situation, a very similar situation to what we're seeing now. And it was the pooling of gold reserves by a group of 8 central banks. So the United States and 7 European countries. So they all pooled their gold to try to help each other's books to show that they had enough liquidity so they wouldn't break the system down.
What the fuck is this guy talking about? All right, I have to get going. I got a meeting and then I got to go to swim. Anyway, this guy's out of his mind. This has never happened before. Patch the cracks. I didn't catch that in my master's program for my economics. I don't know what he's talking about. Yeah, they're trying to fool you, everybody. That's what the derivatives are doing to try to make the price low. So you think, oh, I don't want to buy it. That's what he's really missing. It's to get you into stocks, to sell you stocks, real estate trust, keep your money in the bank and buy 401ks. That's what they're trying to do by keeping the gold and silver prices low. Oh, I don't want to buy it. It doesn't, like silver, it doesn't move. It's about to move. So it's never happened before. All right, I will leave you with our gold price. This guy's an idiot. And where is my, okay. And at this point, gold is $29.05. Look at the big run up. So at 9 o'clock, you had derivatives. No, it's about 8:15. Now I can get down to 28.70. And then a huge call option. They want the price to go up, 28.97. A little bit of 10 o'clock by the US. And now here we go, 29.05. So we're happy. It took its shot. It got it down to 28.70. And everybody's losing their ass as it goes up to 29.05. And even silver, 32.30. So I don't know what this guy's talking about. This is demand. All the gold is by the central banks of the BRICS countries, Russia and China and India and Saudi Arabia buying it. It's not really me and you going to the coin store and buying an ounce here and an ounce there. It doesn't move it. But the central banks taking delivery. Everybody wants physical. And the point this idiot misses, it's because this is worthless. This is worth 1 cent, or your $100 is worth $1. So your 500,000 is worth 5,000. So you got a $500,000 IRA, which if you would sell it, let's say you'd pay 10% penalty and 10% tax. So you might pay $10,000 in taxes and stuff like that. Maybe you pay a 10% penalty. So that would be, that's 5,000. So you'd pay 10,000 in taxes and penalties. And you'd keep 400, and let's say you paid 20, you'd keep 480,000, of which go buy your gold. And when that's really only worth like $4,800, and you're going to get a real $480,000 worth of gold, which is worth 10 times that and on its way up. The real problem is they don't show you the dollar going down. There is no dollar where the dollar goes down like gold, right? Oh, here's the gold price. Boom, boom, boom. It moves its derivatives. Da, da, da. Where's the dollar chart? They don't have one. Because if you saw the dollar chart would be way down here, everybody would it'd be like a panic, like on the Munsters, right? Where everybody sees Herman and Grandpa and they all run. That's exactly what you would see is the frenzy. All right, I got to get going. I got to do a few things, YouTube thing, and try to figure out a class and stuff like that. All right, have a good day, everybody. Stay well. I might come back later and do some sports or something. It's only an hour 20, but I'm trying to keep it. I really want to do, even if I do 2 shows at 120 versus 1 show at 250, because I think people will watch it there. Anyway, have a good day. www.teaserking.com, and I will see you later.